Can you imagine making a fortune by just investing $1,000? Perhaps you will find the idea laughable in light of the current economic crisis, but this is indeed possible. If you are a beginner at investing, this video is just for you. In this video, I will tell you 5 investment strategies which can make you more than 10 times the return on your investment. I will also tell you the trade secrets of investing that you have never heard as an outsider. So make sure to watch this video till the end and get to know everything about making your first investment. If you're new here, I would really appreciate it if you could subscribe to my channel so you don't miss out on any of my informative videos. If you find this video valuable, do give it a big thumbs up, as it keeps me motivated to keep making more videos for you. Hey guys, welcome to RJN Invests. Now let's jump right into it. 1. Index funds. This investment has a low risk rating score. Index funds are considered one of the most secure long-term investments. This investment has produced reliable profits for decades. If you put $5 into the stock market every day for $150 per month, and the S&P 500 returns an average of 8% annually for 45 years, you will end up with $791,000. In times of economic downturn, they become more and more attractive. So, rather than placing your faith in a selection of individual companies to weather the storm, you are instead betting on the overall market's success. Now, even some companies fail, you'll still come out ahead since the rest will succeed. That method has already been shown to be successful. On average, leading hedge fund trailed the S&P 500 index over 15 years. It's easy to dismiss that the S&P 500 as a broad index because it only includes the 500 largest publicly traded companies in the United States. While most S&P 500 companies are headquartered in the United States, only 70.9% of their revenue comes from within the country as of 2017. Therefore, it has a far wider scope than you might at first imagine. However, if diversification is a priority, you can choose a wide variety of funds that focus on various industries and locations. I've invested some of my savings in index funds focused on emerging markets because I anticipate a significant rebalance of power in the world during the next 5 to 10 years. My primary investment strategy involves diversifying my portfolio, but regardless of the market's direction, for example, up or down, I always invest in index funds. 2. Investing in businesses. Now, unlike index funds, you might potentially lose everything due to a single poor business decision. As we are about to enter a recession, now might be a good moment to launch a business that you have been thinking about. There's a considerable likelihood that you'll be working out of your house at first, with a small team and few operational costs. Those 2 factors put you in a strong position to please customers with a low-cost solution. Consumers and businesses alike are looking to save money during economic downturns, which could be an opportunity for your organization. Even while recessions are usually brief and followed by long years of expansion and prosperity, your window of opportunity may be closing quickly. My current priority is expanding the reach of my YouTube channel. That's why I'm going to put this $1,000 into some new equipment that will help me grow my business. 3. Investing in art. Perhaps you haven't given the fine art much thought as a possible investment. The stunning statistics actually caught me off guard. Investments in modern art have outperformed the S&P 500 over the last 25 years. The average annual return on the S&P 500 is 9.5%. Whereas the average annual return for modern art is 14%. But certainly, if we're in a recession, demand for these pricey paintings would decrease, causing the value of our investment to plunge. The truth is that, despite the severity of the last Great Recession, global demand remained quite stable. Over $32.9 billion was made in public auctions around the world in 2007, and $28 billion was made in 2008. Despite the decline in interest, this is still an increase above 2005's auction sales of $17.2 billion. The Vest St. Laurent Art Collection, which now stands at a staggering $483.8 million, broke the previous record for a single-owner collection in 2009. If you want some context, consider that this occurred only 5 months after Lehman Brothers and the markets went down completely. Despite the eye-popping prices of these artworks, the art market recovered from the recession 2 years later, in 2013. Thus far, this asset class has been available to only the extremely wealthy and powerful. The average investor wouldn't comprehend the skills required to select and collect art. How do you propose we put $1,000 toward a purchase of art? Organizations like Masterworks employ both data that is unavailable to a typical investor and a top research team to determine which high-end artist markets are experiencing the most growth. Groups with a global reach, such as Citi, have even approached them in the work together on art market reports. This shows the amount of information they have collected. They help buyers in acquiring pieces of art rather than complete works. This is not an NFT. Rather, it's like slicing up a painting into stock so that everyone can own shares of it. Masterworks' incentives are similarly aligned with the investors because the company only profits when it sells artwork for more than it costs. This platform does not allow investors older than 70 since they believe art investments are made in long term. Masterworks plans to hold its artworks for 3 to 10 years before selling them and dividing the proceeds among investors according to their share values. Despite COVID, a bear market, and high inflation over the past 4 years, the artworks they've sold have generated net returns of 25% each year. 4. Individual stocks. You can control your own financial future by purchasing stocks directly. You have no say in which firms the fund invests in which you can buy into the index fund. Rather, you must accept the funds selected at face value. So stock selections allow you to outperform the market, but keep in mind that 90% of people make a loss. As the market has dropped from its peak during the pandemic, there are likely to be bargains for those who are willing to look for them. When the economy is in the slump, it's crucial to put your money into companies that are well run and have solid financials like low debt, steady cash flow, and healthy balance sheets. There are some sectors that have been seen more resilient in economic downturns than others. Most healthcare expenses are necessary and cannot be put off indefinitely. If you're feeling under the weather, it's time to call a doctor and stock up on some medicine. Companies like McDonald's and Walmart that managed and prospered despite the pandemic downturn in the past are also excellent case studies. It's no secret that any individual are strapped for cash. They seek solace in fast food and bargain shopping. However, you can put your $1,000 into Apple because the company dominates the high-end market and because consumers are resistant in giving their high-quality devices. Most consumers today get their phones through installments rather than outright purchases. That way, Apple can make money and more people can get iPhones regardless of their financial situation. 5. Bitcoin and other cryptocurrencies. Some people thought of cryptocurrencies as a passing fad, but Bitcoin is here to stay. You can also learn about blockchain technology behind cryptocurrencies. Bitcoin is decentralized digital currency that is not backed by any central bank. According to analysis, cryptocurrencies and blockchain will eventually shake up all sectors, including finance, law, cybersecurity, insurance, and more. When it comes to market capitalization, the top 10 cryptocurrencies are continually changing, but Bitcoin and Ethereum are the two constants. These are the most common and reliable coins available. Due to the impending economic downturn, costs have dropped significantly recently. Many traders and financiers view this as a fantastic purchasing opportunity. The considerable risk associated with cryptocurrency means that it should be only included as part of a diversified portfolio. Thank you so much for watching, and I hope you enjoyed and learned something from this video. Please remember to subscribe if you haven't already, and give this video a big thumbs up. So with that, have a wonderful day, and I'll meet you in the next video. Take care.